Welcome back to Market on Close. Let's do some trading and look at the volatility in today's market. Scott Bauer is joining me from Prosper Trading Academy. He's the CEO. Scott, you know where I'm going today? I'm going straight to gold because I was dogging it at the top of the show and I need to hear the bull case. I mean, why hold on to this thing if people dump it as quick as any other risk asset in times of weird tweets?
Yeah, weird tweets is right. I mean, look what we've experienced over the last 30, 40 minutes or so. But, you know, the case for being long gold, Oliver, I don't think has changed at all. Rates, even though we're seeing, you know, some movement today over the long haul meaning 6 months, 12 months, whatever it is, that I don't think they're going anywhere. And there's still risk to this entire marketplace. There's still this risk overhang. So, you know, when you couple all that, plus with the good old-fashioned, you know, mantra of, you know, when it's a risk-off environment, people flock to gold, I still think there's a lot of tailwinds here.
So, Scott, at what point do we look to see if the tailwinds are lessening or changing? Because the other thing is that without the fiscal deal immediate, then does it reduce the odds of inflation, which is like that gold bug case? I know you're not a gold bug, but does that hurt the narrative?
It absolutely does, and I think we've seen that over the last half an hour, 40 minutes with a move lower. But you know what? We're not getting political here. I think this is posturing. I don't think a deal is off the table yet. I personally think that this sell-off that we're having right now is a very good opportunity to buy some stocks that, you know, maybe have come down 1% or 2%.
Okay, and hey, not unreasonable. We've seen tons of wild back and forth in terms of the political arena. So basically just saying that this does not completely eliminate the odds for this. Walk me through the way you look at this right now. I know last time we talked, you were trading GLD. We got a nice move up the past week as equity markets bounced to 2. So where do you look technically for areas where you say, you know what, this is too dangerous for this trade being long, I want to get out, or do you double down at a certain point? Walk me through the levels you're looking at.
Sure. So a couple things here. You know, in terms of GLD, everything that we've discussed, everything that I do is all risk managed, right? It's all completely risk defined. So in terms of, you know, where gold levels are at, if gold starts dipping below about 1850 or so, that's the equivalent of kind of the downside in my GLD position. That's where I would, you know, really probably want to just close my position for a loss. So that's really my level to the downside. To the upside, you know, I'm holding this thing. But I think the interesting thing today, obviously, is yields and the 10-year, the 30-year, certainly the divergence between what I see is Powell talking out of both sides of his mouth today, talking about they're going to fund the economy. They're going to do whatever they can for the longest time because they need to, yet still letting inflation run, you know, really hot. And that's why we've seen the 10-30 spread really its widest in about 4 years now, I think, since November 2016. So I'm really looking at, you know, the yield space and in TLT also, which, you know, can correlate directly to gold as well.
Now, this is pretty interesting, and I like that you're bringing in bonds to this conversation, and Powell too, because the TLT top was at 172 on August 5th, I believe, either 4th or 5th. You know where I'm going with this, Scott.
Sure
the
do.
High for gold, you know where it is, same day, right? So if you know, we're watching them trade similarly, can you use them as pairs on one another? Do you look at overall softness in TLT since the summer and look at that dip as a buy? I mean, how do you view these, or are they just two sides of the same coin? No pun intended.
Oh, yeah, that's a good one, actually. You can look at them. I don't necessarily trade them as a pairs trade because I like to look at them individually, and there sometimes may be opportunity in one when there's not an opportunity in the other. And when I look at TLT right now, which is the 20-year ETF, it is so very closely correlated to how the 10-year trades. So with the spike up that we saw today in the 10-year, TLT has, you know, come down to its low point. You know, it's sitting, it's at its 200-day moving average. It's actually bounced off of that with what's happened in the last 45 minutes in the marketplace. But what a buy opportunity in TLT, which would signal a lowering of rates coming up. So what I'm looking to do, it's an SIB Ultra Texas Hedge special, is sell next week's 155, 153 put spread in TLT. And now remember, the 200-day moving average is right around 159. And then I want to buy some upside there. So I'm going out a few weeks to the end of the month, October 30th, and I'm buying the 162, 165 call spread. Now, about 45 minutes ago, before this big move in the market, I could do that for about 50 cents. That's trading about 60 to 70 cents now. I would wait for TLT to maybe back off a little bit and put this on. It's a very, very bullish trade in TLT, which is also a bullish trade in the price of bonds, but a bearish trade for bond yields.
Ooh, all right, Scott. I see you were talking gold, and you said, you know what? I got something more shiny for you.
I got to throw you a little curveball here.
Yeah, I got a mega bullish treasury trade here, the old Texas hedge. Okay, but still defined as both are spreads.
100% risk defined.
Okay, all right. I like it. These are getting fun. I like it. Scott Bauer, you the man. Love the walkthrough here on the trades and the transparency of what you're doing, the levels you're looking at. As always, Scott is the CEO of Prosper Trading Academy. Not a lot of guys can do trades here on the show every day, manage them, and talk about them. When we come